A big welcome to all our viewers and esteemed investors on this one another webinar hosted exclusively by Axis Mutual Fund. Axis Mutual Fund, as always, is determined to fix your financial success through your investments and determine that alpha in your portfolio. So, speaking of alpha generation and investment success, today we have with us Mr. Tejas Sheth, who is our fund manager for Axis Small Cap Fund. We welcome you on the call, Mr. Tejas.
Thanks.
Tejas, known for his alpha generation thing in the small cap industry, is a well known name. So, today we want to discuss a couple of questions and concerns that we are getting from our investors and viewers on this small cap fund. So, Tejas, before we take up the questions and the concerns of our investors on small cap fund, we recently had our union budget, which was released by our Honorable Finance Minister of India. So, can you just throw a little light on that union budget, or maybe what are your views on that budget which has been released by our government of India? Tejas.
At the onset, thanks, Helly, for having me. On the budget thing, I think it was a very well thought budget in a way. Let's understand where this budget has a strong foundation on the spending side. For last 3 years, when the inflation was increasing and the consumption was under pressure in the economy, government did the heavy lifting by increasing the public spending. Okay, and hence the economy kind of sustained. When the inflation has kind of peaked out, but at the same time the government spending has slowed down for various reasons in 2024, I think this was the budget which required a boost on the consumption side.
True.
So that the immediate consumption boost can percolate to the GDP growth, and hence government kind of added 1 lakh crore kind of amount to the kitty of the consumers. So it's a well thought budget. The public spending on YOY basis remains flat at broadly 11 lakh crores, but additional 1 lakh crore which they could have increased on the public spending, they kind of passed on to the consumer pockets, so that the spending can really boost the economy in the short term, while the heavy lifting on the public spending continue to remain strong. So I think it's a well thought budget wherein the government really knows that the immediate measure really required to curtail the slowdown in the economy is by consumption, considering that Indian economy, 60% of the GDP is driven by consumption, right? And hence it is the right step in the direction. At the same time, they are also measuring the fiscal deficit. So with this revenue cut which they have taken on the direct taxes side, they are not increasing the fiscal deficit. The fiscal deficit number which they had targeted for FY26, it remains there at close to 4.5% of the GDP. So I think it's a well thought budget. The additional revenue which they're going to generate, they're going to give they have passed on in terms of tax benefits to the consumers, which will kind of help in boosting the economy.
Absolutely. So liquidity is something that this budget has very well addressed. And as we call it at Axis, we have defined this as a reformative budget. So this is reformative in itself, and it is something to look up to. A very good initiative by government.
True. Also, let's understand, I think the fiscal policy side, the government is playing a good role, while the the RBI on the monetary side will also has started playing a role in terms of infusing the liquidity of nearly 1.5 lakh crore, which they've recently announced, right? So that will also help in terms of boosting the economy. So it's a classic combination of the fiscal reforms and the monetary policy, which will kind of help India to curtail its slowdown, and at the same time lay a strong foundation for medium to long-term growth.
Absolutely. So with this, we are also seeing a lot of inflow in terms of SIPs and STPs in our funds, when the disposable income in terms of the younger generation is much more. So this is absolutely a great reformative thing that Union Budget has addressed. True. So they're just taking up the next question on our list so far is on what are the key global factors to consider for a new investor currently who is ready to move into the investments market?
I think the global market is kind of going through uncertainty right now because of the leadership change which has happened at the largest global economy, which is America, right? The policies at the global level, which will be driven by US, A lot of uncertainty has got added with Trump coming to power. I mean, recently we have seen that the kind of tariff which the new US government is imposing on its neighbors as well as on China has created a lot of uncertainty at the global level, which also gets impacted for the emerging economies like us, because with a very, very pro-US reforms and uncertainty which increases, a lot of capital outflow usually takes place at the global level, and they start moving towards safe haven, which is US, and more so towards US bonds. So India, being obviously an emerging economy, has seen some outflows in January, although they have been amongst the lowest outflows versus the other emerging economies. But it will kind of impact the liquidity at the Indian economy level. Now, how this uncertainty gets addressed is where the real question will lie. I think which the global economy will kind of get clarity in next 2-3 months, that the negotiation which Trump government is having with its counterparts, be it Mexico, Canada, China, and also he recently talked about European Union. I think that's where the larger clarity will emerge. So I think we should give maybe 3 to 6 months to the US government to settle down, and that will add, as I said, a lot of clarity towards the investment profile for Indian economy kind of at the stock market level.
I think that is a great perspective towards global markets as well. And I think we have addressed the question of our investor. So, talking about the next question that I can see on my screen that is popping up is, how should an investor currently look at the recent market corrections owing to the given corrections and volatility?
So I think Indian economy and Indian stock market has been quite strong over the last 3 years. They have generated returns at a much higher rate than the long-term average. For any, let's say if you take even 10-year average, I think the returns in last 3 years have beaten down significantly. Sorry, has kind of generated much more returns. So there is some level of law of averages which will play out. Also, more so, the valuations are getting corrected in the recent times because of the economy slowing down. So the uncertainty at the Indian economy is high because of the economy slowing down. The uncertainty at the global level is also very, very high because of the, as I said, the new government coming at US will kind of bring new reforms. In this combination, I think the valuations at a higher level is getting kind of corrected. Having said that, I think it provides a great opportunity for long-term investors. If you see friends and relatives around us, I think a lot of people have missed out the last rally, right? In terms of making money in and investing in stock market. I think this correction will provide them that opportunity to capture on the long-term opportunity with the Indian economy provides, and more so on the stock market side. So my only submission here is that if the correction happens, I think it will be good for investors to continue their SIPs, in fact, double down on their SIPs. And whenever we've seen that the correction kind of bottoms out, the returns to the next peak has been very, very good.
Absolutely, Tejas, absolutely. And when we speak of valuations, we should not even forget that small caps still have that bandwidth of growth, that is where we are looking at. And valuations is not just the only concern here. So, absolutely, I vouch for the fact that their SIP should double up now and not just wait for some other factor to come in to increase their returns and the other scenario, basically.
Yeah, I can show you one chart here in terms of how this corrections have generated returns for when the next peak comes. If you can see our screen currently,
yeah,
is this visible?
Absolutely, yeah.
So if you see this slide, whenever the correction happens and if the investor maintains its discipline of investing through the correction through SIP route, the next peak when the market kind of rebounds, generates 20 to 22% kind of CAGR return in small cap funds.
Okay.
So it's been tested in past four corrections whenever the small cap index has corrected largely in last four events or four instances. The next peak has generated a good 20% kind of CAGR return. So I think when your investors are watching, this chart should play in their mind in terms of that they should not get scared about the correction, but rather continue their SIPs. And India is in a very sweet spot at the global level. So for them to make return over next 5-10 years will be very, very good.
This is a beautifully summarized chart, Tejas, and I think this gives a very clear synopsis of where small caps are currently positioned and where we see and scope of alpha generation. So, hope we have answered the question of the particular investor. And now the next question that I can see coming up is compared to the large caps, mid caps, where do we see small caps currently positioned in the market given the market scenario?
So small caps have generated, as I said, a good returns over last 3 years. Barring last 1 year, the correction has taken place in the index, not only at small cap level, but even at the Nifty level. But I don't see any bubble of froth in the valuations.
Okay.
At the overall index level, there could be froth or bubble in some of the sectors within the small cap, but overall at the index level, I don't see much froth. Also, a lot of small cap companies don't have a very leveraged balance sheet.
Okay.
So even if there is a slowdown in the economy, I think the overall balance sheet strength of these small cap companies, large names in those small cap index, they don't have a leveraged balance sheet. So it wouldn't be a tough time going ahead. It will be more like an economic correction, cycle correction kind of, which may play out over, let's say, next 3 to 9 months. But overall, there is no panic as such I see at the balance sheet level for these small cap companies. Coming to valuations, yeah, they are kind of one standard deviation above the long-term average, and those may kind of get corrected, let's say, next 3 to 6 months because of the uncertainties. But as I said, it will provide a strong opportunity for these investors to invest over long-term basis and generate handsome returns.
We in the industry call it chota packet bada dhamaka, as small caps are known for it, and absolutely 24% CAGR returns when we see over the 2024-year timeline. It's absolutely astonishing to see such kind of amazing returns in small caps. So as compared to large caps and mid caps, I think small caps have really outperformed the other two indices. So now the question that I can see is regarding the time period, which is concerning that over the past 1.5 years, and particularly in the 3 and 5 year periods, the Axis Small Cap Fund has consistently underperformed related to other AMCs offering small cap funds. Can you just throw a little light on this particular query that we have received?
Yeah. So Axis as a house has always been focused on quality and growth. Right. I mean, and we have generated strong alpha during over a longer period of time, because quality and growth may suffer in the short term, but over a long period of time, they always generate superior alpha.
Absolutely.
The last 2-3 years was a period where value kind of outperformed the growth companies, right? And those 2-3 years always come in the 10-year period cycle when value outperform growth. And as I said, Axis style of investing is not more towards value, but more towards quality and growth. The fund kind of underperforms during that time. But if we take over longer period in time, when quality and growth has a larger share of outperformance, as a house and even as a Axis small cap fund, it will keep on outperforming and generating superior alpha. We have seen in last 1 year when growth and quality has been outperforming value, most of the funds and even Axis small cap fund has kind of generated superior alpha. And I think that's where the endeavor will lie, that we will not dilute our proposition of chasing growth and quality companies just to get benefited in the short term cycle of when the value outperforms growth. But over longer period of time, we'll continue to play with that strategy, and hence will generate superior alpha for our investors.
Absolutely. So your small cap, as we call it, your baby is a lambe race ka ghoda. It's not something to play for, 3 years, 5 years timeline. It is there to run the rally and it is there to capture that alpha basically.
Totally. I mean, see, India is in a very sweet spot, as I've been saying. I think the
Yeah,
growth for India is not for 1, 2 years. It is a decade, 2 decade kind of growth opportunity which India is today standing at. Okay.
absolutely.
Within, if the economy is doing well, always the smaller companies have larger opportunity to grow and capture profitability from that cycle, up cycle.
Mm.
So Axis Small Cap always focuses on those names which is well placed to capture that growth at a much higher rate than the GDP growth, but not at the cost of compromising on the quality of the management or quality of the balance sheet, or even for that matter, seeing a growth which will be a multiplication of the GDP growth.
True.
So that's the endeavor. We will not dilute that as a proposition, as a strategy. And we have seen that in the past, this strategy has played a very, very long term uh, generation of alphas.
Absolutely. So we hear you, Tejas, that you are more growth and quality focused as our fund house view has always been as compared to the value style of investing. So can you throw a little light on your stock selection? How do you define a particular script is eligible for your small cap fund? How do you look at a particular script and how does it enter your portfolio? Please, if you can.
Yeah. So I think there has been a saying that small cap is the bottom approach
Yeah.
investment side, right? But for me, it is very, very top down. I always focus on where the economy is growing. If the economy is seeing a very, very high growth, small cap companies always outperforming those economic cycles. Also,
True.
within the economy, I spend at least 60 to 7% of my time in identifying sector cycles. While the economy may have its own cycle, within the economy, sectors always have their respective cycles. I mean, couple of sectors will always outperform at a much, much higher rate than the economic growth, while
True.
there will be sectors which will kind of have its down cycle with the economy. So the focus is on identifying those sector cycles, is where my, as I said, 60 to 7% of my time goes. Once I identify a larger trend in terms of sector and economy, the next 20-30% of my time goes into identifying companies within that cycle. And as I said, those companies have to be in high proposition of growth opportunity and has to be high quality in terms of management, in terms of balance sheet. Because when both these factors matches up, the the growth on the P&L side will be multifold. And
Absolutely.
at the bottom line, it will be even much higher, considering that the balance sheet is not leveraged. Most of the profit generated at the operation level percolates to the PAT level. So that's how I identify stocks. Um, does that mean that I don't do bottom up approach? No, the answer is no to that. I also do bottom up approach. There are some of the names in my portfolio which you will find that despite the sector not doing well, I still own companies in those sectors, because those companies have kind of optionality in terms of growth opportunity, or optionality in terms of launching new products, entering new markets, and hence I follow some bottom up approach as well in my portfolio. So it's a classic combination of top down and bottom up, but at the same time I would like to say the larger part of my portfolio will be always top down.
Amazing, amazing. So that's a well-researched portfolio for all the investors that are eyeing to, make their investments, maybe point to point or SIPs. The fund is all open and it's a very well-researched portfolio. So as I can see on my screen, there's some little appreciation coming in for the returns that the investors have already generated in the fund so far. They have loved your investment style, and I would just like to mention this over this webinar as well. So hats off to you, Tejas, for this.
Thank you.
Next, the questions that I would like to look up is what changes have been made to the portfolio recently, and how are we confident that that is going to take the fund performance to a next level?
Yeah. As I said, the period of hyperinflation at the global level and even at the India level is getting over, right? A lot of consumer-driven sectors as well as consumer-driven stocks, which we classically say discretionary B2C, kind of did not grow over last 2 3 years because in a high inflation environment, the consumption power of at the rural and semi urban level gets diluted. I see this kind of behavior in terms of cycle. The hyperinflation cycle is getting over, as well as the monsoons have been good, which kind of will boost the rural economy. The El Nino impact on the weather side is getting diluted, and hence the expectation is that over next 2 3 years, the monsoons in Indian tropical climate will be quite favorable for the rural economy. So I have started adding low discretionary names to my portfolio over last 3 months. At the same time, I'm not adding or rather even diluting my holdings on the cyclical side. I think the cyclical sectors have outperformed over last 3 years. The standard deviation on the valuation for these names have been at about two standard deviations. So the valuation fraud lies more on the cyclical side rather on the broad market side, and hence I'm avoiding those names as well in my portfolio. Thirdly, what I've done is in terms of uncertainty, I have kind of increased some cash level in the portfolio because on a down economy, I think the cash will kind of outperform the broader return of the equity, which has kind of helped in a way in generating alpha for last 3 4 months. But the same cash will also give me an opportunity to enter some of those stocks at a lower valuation or at a favorable valuation over next 6 to 9 months. So
Okay.
that's where I think the broad strategy of the fund lies. We aren't taking very large bets on the cyclical side, but we have
Mhm.
started nibbling on the consumer-driven names.
Amazing. That was a very clear, thought through process, I think, and that would have answered the query of our investor. And now something related to budget again. In the light of 2025 Union Budget's focus on boosting consumption, how do you anticipate these measures will influence the growth prospects of small cap companies within the fund's portfolio?
Yeah, as I just answered that, the lower discretionary sector has suffered or has
Hmm.
grown for last 3 years, right? Now, with the government giving money in the pockets of the lower income group or even middle income group, I
Yeah,
think the consumption for that group will come back.
true.
One, there's a huge pent up demand, which has been lying low for last 3 years, and with the some savings coming from the income tax, I think that strata of the society will start consuming more now. And as I said, we are adding those kind of names in our portfolio on the consumer electrical side, on the QSR side, where the ticket side of consumption is not very large. At the
Okay.
same time, we are hoping that the monsoons will be much better in 2025. The monsoons in 2024 were good. I think it will improve in 2025, and hence the rural side or the semi-urban side of the economy will also see benefiting out of the normal monsoons. So overall, what I believe is over next 1 to 3 years, the low discretionary sectors on the consumption side will outperform the broader markets.
So they're just having said that, do you anticipate that the tier two and tier three cities are going to see an upsurge in their spendings, or maybe there is going to be a premiumization in the spendings as well as compared to tier one cities?
Yeah, totally. We have seen that urban side of the economy is seeing some slowdown over last 3 to 6 months, um, while the semi-urban and the rural side of the economy are seeing green shoot. Now, will they lead to a steep increase in the consumption? No, it is always gradual, right?
Okay.
But at the same time, I would like to highlight that the slowdown in that side of the economy at the lower end of the pyramid has kind of bottomed out.
Okay.
Now, how speedily will the consumption revive there? I think it will be very gradual. It will not be a J
Okay.
curve kind of revival. But at the same time, the companies which we have invested over last 3 years to capture that consumption story will benefit the biggest.
Great. Amazing. So I think that answers the query as well. And one other question that I can put up is, considering the geopolitical outlook and its potential impact on market dynamics, how do you assess the Access small cap funds ability to navigate these challenges and capitalize on emerging opportunities?
Yeah, so that's a great question. I think
Yeah.
geopolitical uncertainties have increased over last 2 3 months. What larger steps which we have taken in Axis small cap funds is avoiding sectors which, as I said, cyclical at the global level. Also, sectors which are very high export dependent on the discretionary side. So, despite we being overweight on chemical sector, which is an export oriented sector, but it doesn't get impacted with the larger US economy reforms. That sector has its own cycle on the global agri cycle, and hence we believe that has bottomed out, and we continue to own those names in our portfolio. But we are avoiding names which are highly dependent on the global economic cycle, either in terms of realizations or in terms of volumes. I think it's time to look much more internal on the consumption side and avoid the global cyclical Indian cyclical names.
Okay. That is a good explanation of the question. Next question is again on the investment style that we have already taken up. But one thing that we would like to highlight over here is that in the recent market volatility, how was our fund position? Because somewhere we have heard that it was 8% up even when the market was falling or there was huge volatility in the market. How did we manage to take up the whole scenario, and how did our fund look at that particular point in time? If we can address that.
Yeah. So the larger call which we took was post the announcement of Q2 GDP, which slowed down significantly, where we continue to believe that Indian economy will remain under pressure in the near term, considering that the liquidity crunch at the economy level, as well as the rolling of money has not happened, plus the slowdown on the consumption side at the urban level. What we did was we took two measures. One, we did not take very concentrated bets on our portfolio. We played a diversified game here. We invested at a larger area in terms of stocks.
Okay.
Second, we did is what we took some active cash calls. Post the peak out which we saw in September last year on the indices side, I think we believe that the economy is slowing down, and hence there would be some valuation derating which will happen at the broad market levels. So from October onwards, we kind of started exiting cyclical names, and those names where we exited, we did not reinvest that money into the newer names. We rather kept our cash levels higher at the fund level, thinking that going ahead, once the uncertainty settles down at the economy level in India as well as the global geopolitical level, it will provide us a good opportunity to buy some amazing companies, amazing sectors at a reasonable valuations. So that's a broad thought which has helped us generating alpha in last 6 months, and hopefully it should help us over next 6 months as well.
So when you say this, one picture that runs in my mind is कि एक शेर अपना पैर तभी पीछे लेता है जब वो अपना बड़ा पंजा मारने वाला होता है. So I think with this cash calls and defensive position that you have taken currently, I think we are all set. The Access Small Cap Fund is all set for its next level of returns jump that we can see in the market. We absolutely love the defensive position that you have created, and I think our investors are also very well happy with it. So Tejas, speaking of the small cap market segment, what is the market cap? I think there's 41 lakh crores of market cap that is, available in the small cap space. So how does one particular stock, come to the eyes of Tejas, and how does it fall into the portfolio? If you can just give a little figure and data behind it, that would be great.
So as I had mentioned earlier, the only way I look at identifying larger growth opportunity or wealth created in the market is to understand what part of the economy that company is catering to.
Okay.
Right? If the sector or the product which the company is catering to has a very long run opportunity in terms of growth, that is the first criteria for us choosing that particular name in our portfolio. And
Absolutely.
then the second comes is the quality of the management. The management needs to have hunger, they
True.
need to have the kind of pedigree, as well as they need to have that kind of team to capture that opportunity. See, let's understand, we all know that India will be the fastest growing economy over last 10 years. Okay. Within those next 10, 15 years of high growth, there will be sectors which will be growing much larger than the economy, right? And if the per capita story of India really plays out, the larger growth always will come from consumption and more so on the discretionary side of the consumption.
Okay.
We have seen that whenever economy at the global level crosses $2,000 of per capita economy,
Hmm.
uh, the growth of consumption on the discretionary side is multifold over next 10 years. India
Okay.
has crossed that path now. So,
Yes.
and where we know this, certainly we know that next 10 years is for India. The names which you would remain invested in our portfolio is one which will grow at a much larger opportunity in capturing this larger growth. And second, as I said, the management which doesn't, which has hunger to capture that opportunity. These are the two criteria we purely follow in identifying the core portfolio holdings in our fund.
That is a great explanation to, the question that was put up. And I think that would be a good wrap to the whole webinar over here. This is for all the investors and all the viewers. We will be shortly putting up a link where you can make your SIP investments, lump sum investments right in the small cap funds at the end of this webinar. In any case, if you have any queries, please reach out to us through our website or maybe through our customer care, and we'll be happy to assist. As well put up by Tejas, small cap funds rally is still there, and the growth prospects are still, very much in line. And we always would love, Access Mutual Fund would always love to listen to its investors and viewers. So thank you all for joining in. We'll keep doing on such seminars and webinars for your knowledge and for your updation. Thank you for joining in. Thank you, Tejas. Thank
Thank
you.
you very much.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.